Hi everyone, welcome to Strike, and we are going to look at how you go about finding strong or weak stocks to trade in after a correction or a rally in the market. The underlying theory around this is to look for relative strength and to look for performance. And once you understand how to find a performance in a market during a particular period, you can actually dig deeper and drill down to the key stocks that you want to really participate in. So that is the process, and we're going to look at a step by step process that you can build to actually do that. So one of the ways we go about doing that is start with the heat maps, and the heat maps have a very special feature here, which is custom heat maps. And what custom heat maps really does is that if you're actually looking at a period in the market where prices have fallen significantly, so say for example, if we actually go and look at the Nifty 50 and there's a period where prices are falling, you want to know what has really been holding out or performing during that period. So here we had a correction from the 19th of September down to the 26th of October. Now, if you were in that time period, what would you have really done? You would have gone and done a custom on the 19th of September, and you would have taken that ahead to, so the 19th here is possibly a holiday, so we say 18th of September, and we go ahead to 25th of or 26th of October. Right now we've put this time frame, and moment we apply it, what you will find is that the heat maps now start showing the performance of the given time period that you've really chosen, and you'll see which are the best performing and worst performing segments of that time. What it allows you to do, therefore, is that once you know what is on top of the list, you can actually make a choice of which sectors or stocks you really want to be in. Now, in this case, what you actually end up seeing here is on the top of the line is the realty sector. It fell only by 1.2%. Second is the CPSE or the public sector stocks. The third was, of course, FMCG, followed by small caps. So this sort of gives you, now this is giving you four segments that you could actually focus on in the subsequent period. And what you really then have to do is you can actually further drill down within this, what are the best performing. So you would have found that realty stocks, where the realty index is down 1%, the best performing stocks here are Prestige, Swan Energy, and Shobha Realty. So we can actually open and look at the charts of these stocks. So I open Prestige and I look at what it really did, because it actually performed between September and October, when there was actually a correction. Yeah, so this stock was actually going up between this time period. When we look at what happened here, from September to October, it was actually up. The stock was up. It was already outperforming the Nifty, and it just continued to do that for the whole period. So if you actually looked at, so if you opened this chart at that point of time, you would have found it having not just relative strength, but you could actually go to the Rohit setup in terms of timing your entry points. Because once you found a stock that is strong, you want to be able to look at the Rohit setup. So this is what we have gone to. We have chosen Rohit setup. What this is that plots the Rohit momentum indicator, also known as the RMI, on top of the chart. It tells you where the buy signals were. So the buy signal here was somewhere in early October. Now, since we ran this test only around the 26th of October, the trade we are trying to take is after the stock market has taken a correction. So where would you really make an entry? Typically, you want the stock to be close to a support level, either the 20-day or the 40-day or the lower band. And if it is close to one of the key support levels, then at that point of time, you know that you can use that as a stop loss and actually build on your trade. And as long as it doesn't really break that on a trailing basis, it gives you a pretty good ride on the way up. So that is what we really look for. Sometimes you might get a buy signal after you've taken a trade. Now, say for example, prices had moved up a lot, then you wouldn't really be able to take a trade because it's not close to a key support, and then you would actually wait for the next buy signal from the RMI indicator itself. So we can take a second example. We have multiple outperforming segments here. For example, if we went to the CPSC, and on top of that we find the first name as NBCC. So we click on NBCC, we open the chart, we go to the Rohit setup, and essentially you'll find NBCC starting to perform from mid of September itself here, and it went up a bit here as in the October rally, and then pulled back again. And so by 25th of October here, it's at a slightly higher price than it was in September, around 6-7-8%. Now what it did here is, okay, it was close to the averages, but you can see prices are consolidating. Okay, so if prices consolidate, and they didn't make a move, at this point the RMI came back to zero and then gave a buy signal. So this is actually a very good buy signal. When the RMI gives the bullish crossover after having gone below zero and then trades above the 20-day average, this is a very good entry point. So then that allows you to actually ride the entire move up from there. So this is a different setup that we found in a separate stock, but as you can see, it has done exceedingly well, and these are the stocks that would have performed best based on the outperformance that they had during a corrective phase in the market. Let's take one more step back and we can go to the next performing segment. Let's say small caps. Okay, now even within small cap, you might find certain stocks doing exceedingly well. Let's take BSE, or Bombay Stock Exchange. We are talking about September to October, which is right here, right, late September 12th, and market corrected, and then moment it started to bounce, the stock took off, and even while there was a correction around up to the 25th of October, the stock continued to do well. Now what it has done after 26, it's up here. So when we go to the Rohit setup, what you'll find is that it had already moved quite a bit, and when do you want to buy is possibly on the next pullback, or when it gets closer to the 20-day average. So it was up here around the 25th of October, far away from the averages. And does it really pull back a bit over here, but not significantly? It didn't touch the 20 DMA, and so it didn't really give you a very good entry point. So it can happen that some stocks are running so fast that at that point of time it doesn't make sense to make an entry, and you don't get a subsequent entry point as well. So is it necessary that we trade every stock that we come across? The answer is no. There are many outperformers, a lot of green over here. We can continue to explore different setups and find the stocks that we like. So that's the approach that we take. That is during a corrective phase. So we looked at Nifty first. During a corrective phase in the market, we looked for, based on the heat maps, where the performance was when this market was actually falling. And then in the subsequent rally, those are the segments that actually ended up doing the best. Now it is in hindsight, we know that realty and PSU stocks actually did the best during this uptrend. So they were already outperforming during the correction, and that's where the performance came from. That's what performance chasing is really all about, and it can work both ways, which means that, say for example, you're looking for short trades. Now you think this rally has gone too far, and you want to find out which are the weak segments in the market and actually be able to participate in them. So we'll try to do this exercise that when the index is actually peaking out or rolling over here, moving around here, so somewhere, we've been talking about the momentum loss. So if you actually look at the Rohit setup, okay, and you start seeing, okay, the momentum is going into sell over here. So in this time period, as prices are still making higher highs, you want to judge where is the weakness, where am I going to really looking for stocks on the sell side. So somewhere between, say, early December, we could actually say run from say 14-15 December up to say 15th of January. We could look at where is the strength and where is the weakness. Okay, and does that really tell us something about the market's behavior? So let's again do the same exercise. We take a custom range, okay, and we're going to take that range in December to January. So we'll take the 15th of December and we'll go up to the 15th of January. We apply and we look for results. And what do we see? Now, what we are looking for is weakness, not strength. The reality is, of course, on top. So is energy, oil and gas, CPSE. But we reverse this upside down and we look at, okay, where is the weakness? Number one on top is media, followed by financial services, private banks and banking. So ideally, this is where you would be looking for your shorts, because this is where the weakness was from mid of December to the early part of January. And so moment you click onto any of these stocks, now again, would you look for the best performing stock or the worst performing stock within the sector? That's again a choice. Maybe we should look for the worst, because after all we are looking for weakness. So not just the weak sector, but also the weak stock inside the sector. So if I click on media and I go to PVR Inox instead of network 18, that is where the maximum weakness is. Okay, and so that would be the place I would really target. Now of course in these heat maps I am looking at a broad list of stocks. Not all of them are FNO stocks, so that of course requires an approach where I actually go to an FNO list on the short side. I do have access to an FNO basket over here where I can actually run performance. So say for example I do an FNO basket performance, and now I'm looking at this performance. I can actually say negative to positive. So I have the worst performers on top. Time period should be the same, which is from 15th of December to the 15th of January. Apply, and boom. So we should be having a list of the worst performing stocks on screen. And once you have this list, okay, so then we are actually talking about what has really not done well during this period. So again, we do have PVR Inox on top of the list. So surely this was not performing around the 15th of January, which is, we can see here, was already falling. This is while the market is actually going up. This is a sector which is falling. In fact, it started to fall, in late December. So even if we ran this filter from 15th of December to 30th of December, you would have seen PVR Inox on top of it, and that would have become a very good candidate on the sell side. And that is essentially what you come to know. You chase weakness when you're expecting the market to sell off. Look for the weakest segments and you find them as your candidates to really trade on. And that approach can be applied both on the long side and short side. Like I said, on the short side we have an FNO basket where you can actually look at which are the weakest performers and actually chase them. So here now, see what we are looking at in the FNO basket, and this is of course for the day. So we go back, we do the custom range, which is from 15 December to 15th of January. Let's say we take a shorter time, right? Okay, we say 3rd of January, 2nd of January. So we try to look at, would I have something different? Yes, I would have had an Escorts, I would have had a Coforge, I would have had an Infi. So where do I really go? Let's start with the first one, and this is an FNO stock. So we start with Escorts, and what do we really see? We see that Escorts was not performing from early December to late December. So it could have been a good short candidate. Now of course after late December, it hasn't done much all the way till now. For the entire month it's been flat. So this too can happen, but it does remain on top of your list, right? So what do you do here? In this case, you go to the Rohit setup, and essentially in a case where it's doing nothing, you wait for the next sell signal. So say when you look here, now this is the same approach that we took in the bullish case, that you want to sell close to resistance. So if you want to sell close to resistance, Escorts here has been we did a test till early 2nd of January, which is down here. So the stock has already fallen, it's far away from the averages, it's not at a resistance level. You wanted to go up before you sell. So you wait, okay, it gives a buy signal here, you wait, you let it go up and wait for the next sell signal. So it's sort of not able to cross its Bollinger Bands, and now the RMI is giving a sell signal. So the actual sell signal is only coming now, and that is where it becomes relevant. So this is how you'll actually have to pick through, looking at the heat maps, looking at the FNO segment, doing your custom time frame, and looking for ideas on the sell side in a weak market. We'll do one last exercise, again taking the same time frame and taking a different stock, again descending order, so that we can actually get the stock that we find weakest on top. I actually wanted to take it from 15th of this to the 2nd, as we did the last time around. Okay, so Escorts was there. Let's take the next one, whether it's a Coforge or why not HDFC Life. Let's see what HDFC Life did in this same time period. So here you have HDFC Life. If we ran the test from say 15th of December to the 2nd of Jan, which is somewhere here, okay, prices have continued to decline. Now we add the Rohit setup to it so that we can actually see whether there was an opportunity to short close to the averages. The last time was, yes, it was. So 2nd of January prices were still here. Okay, it showed up and then it went sideways, hit the 20-day average. So it's very much at a key resistance level. And that was a very good point where you could have taken the 20-day as the stop loss and taken a trade. Following that, you had the RMI also go into sell mode, and then the stock actually sold off. So here I've shown you a couple of examples both on the long side and short side in the current state of the market, that even even though you see Nifty holding out, many of these stocks are actually in decline through January. And if you spotted the stocks that are in decline in the late stages of a rally, you can actually be early on the short side of particular stocks within the F&O segment. And similarly, when you are seeing a correction in September to October, you could have spotted stocks that were outperforming that continued to perform throughout the November-December rally. And this is the approach that you'll really need to apply on an ongoing basis in all future events, corrections or advances to find the key stocks that you should really be focusing on.